Hi everyone and welcome to the weekly update with me, Rich Perry, market analyst at Handtech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. Now, moving into this week, there's certainly been an element of consolidation moving into these markets, because I think what we've seen is the reaction to this new Greek government in the Eurozone is not really certain yet. The market doesn't really know how this whole debt renegotiation is going to play out. The Greeks are now travelling around, or the new Greek administration are now travelling around the key European countries to just engage with the finance ministers in an attempt to, I suppose, lay the groundwork for some sort of renegotiation. But it depends on exactly how Merkel really plays it, because at the moment all noises out of Germany suggest that they're not going to be playing ball at all. But certainly at the moment, the reaction in the markets is fairly local to Greek assets. You've seen the stock market fall significantly, I think around 12%, and also the Greek 10-year government bond yield sharply higher last week, up above 11.5%. Although that is clearly well below where we saw the Greek bond yield spiking in 2012, up towards 40% in that at that time. So still significantly lower from there, but it seems as though the financial markets reaction at the moment is fairly centralised to Greece and rather than around the Eurozone. Stock markets, for example, remain very buoyant. So we see what happens this week. I think it's going to be something that continues to run, but any sort of news updates will have the potential to have an impact on the market. Now, what we're also looking out for this week is a considerable amount of economic data. Now, that's going to be driving the market, I think, throughout this week. First week of the month is always a key week. You've got all the PMI data, and then moving through, you get all the key US labour market data. So those are the two big issues that we are seeing at the moment. We've already had the Chinese PMIs come out, and also the Eurozone, and they're not too bad actually. They've sort of held their ground a little bit. The Eurozone in line with expectations, still above 50, which is a positive, I think, for the Eurozone considering what it's going through in terms of deflation. Now, we also had the UK manufacturing PMI, which actually came out fairly positively today, slight beat of expectations and an improvement on last month. So gives us a little bit of hope moving into the afternoon for the ISM manufacturing number. But certainly I think the focus this week will be moving towards that payrolls data. Payrolls last month did have a relatively decent report, strong payrolls number, but the average hourly earnings is the key focus I think people are now looking out towards. Certainly the Fed seems to be focusing on that as well, although it did suggest that the labour market was strong in the last FOMC meeting statement. Certainly the average hourly earnings will be looked at as something that needs to pick up for the hawks on the Monetary Policy Committee to really sort of gain a bit of traction in their argument. Now, the thing I've noticed is that the US Treasuries continue to fall away, and it's interesting because the 10-year is now at the lowest level since May 2013, and certainly that is not a market that's screaming out for rate hikes. And it'll be interesting to see if that bond yield starts to pick up on a strong payrolls report, if we see one, and also potentially if earnings start to pick up as well. So throughout this week we've got Forex markets, which are, I think, at key crossroad levels. Certainly the euro is one. The euro's stayed relatively firm in the last few days, and it's trading sideways and it's holding up quite nicely. It's about to approach a key downtrend, a 6-week downtrend that has been dragging it lower for the past few months, and also that comes in at $1.14 at the moment, so not too far above where we're trading at the moment. Euro needs to hold above the support at $1.1260 to maintain that support, but certainly at the moment it's holding up quite nicely. And it's interesting because you've had a fair bit of negative news flow recently regarding the euro, and also the fairly hawkish Fed statement as well, but there was no real selling pressure on the euro. So is there something going on there potentially for a technical rally? Now, also cable's an interesting one because it actually is slightly underperforming the euro. In fact, the euro is the strongest performing major currency over the past 7 days, which I thought was very interesting. Cable has just started to drop away again. It couldn't get back above that $1.52 ceiling, which was a big resistance on an intraday charts. and it's now fallen back below, a couple of times back below the $1.5030 level, which was an intraday support as well. So it could suggest that we're now moving back towards a test of that recent low at 49.50, and I still believe that cable could well be coming back towards a test of the 48.10 level, the big July 2013 low. Now also we're looking out for some key levels to be broken on the dollar yen. Now dollar yen had been trading sideways between 17.20 and up towards 19 figure. Now that had been the case for a couple of weeks, and it certainly looks like intraday today there'd been a breach of that support at 17.20, and it seems as though, although the bulls just supported that very quickly and pushed it back up towards back up through that 17.20 level, I think that the 117 level 20 continues to come under test, and I think it will do in the coming days. Now certainly it looks like if that were to be the case, and it was to be, say for example, a close below 117.20, I think that would reopen a test back towards the 115.50 area, which is a key support on a medium term chart basis. So on to the indices. Where are we looking at in terms of markets? Well, the earnings season in the States has not really been able to generate any sort of upside traction for the S&P 500, which is now trading back at the 144-day moving average once again, which has been supportive through the last 6 weeks. That currently comes in at around 1,998. And the S&P 500 is sort of testing the lower side of that, so it really is on the brink. It needs to use that and bounce off support, otherwise it could well start to see a bit of a negative outlook gaining on this chart. Now DAX is a completely different kettle of fish. It's testing the highs consistently. You've got the injection coming up, or prospective injection of quantitative easing to help, and the equity markets are certainly buoyant on the back of that. DAX is needing to just hold above 10,550 support area, otherwise it could enter into a bit of a technical correction area, but still it looks pretty strong. FTSE's hanging on to the coattails of the DAX at the moment. FTSE is still just okay in terms of upside, but it's still just beginning to lose momentum on some of the indicators, and it just suggests that if it has a close back below the 6,750 mark, then it could well come back towards 6,640, test of that support. But it'll be interesting to see what happens on FTSE. Now, where are we looking at in terms of gold? Well, gold price had a bit of a choppy couple of days at the end of last week, but I still think that it could well be using this old key October high of 1,255 as a basis of support. I think the medium term that could be where a support starts to form, because I think the outlook is still beginning to turn around on this gold chart in the medium term and become more positive. There's several reasons why $1,255 is potentially going to be now a medium-term support area. Okay, so for the rest of this week, well, I said already that we've had all the PMIs out this week. So in terms of the economic calendar, we are looking out for on Tuesday we've got the Reserve Bank of Australia giving out its monetary policy decisions, and then on Wednesday we've got all the service sector PMIs. So you're looking out for China, you're looking Eurozone, UK, and also the US ISM non-manufacturing PMI as well. So it'll be interesting to see how those generate market sentiment. And also then we're looking forward towards the labour market in the States. We've got the ADP number on Thursday, then obviously the weekly jobless claims, but finishing off with the non-farm payrolls on Friday, which, as I've said, could well be focusing more on the average average hourly earnings than the actual payrolls data figure itself. So I wish you good luck in your trading throughout this week, and I'll speak to you again next week. Thank you.